Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairburn, and great to be with you on this roller coaster week. It's been a tricky week, and do we have to look at the indices? I think we actually have to in this class. It's a Markets and Sectors class. I'll tell you what, we're going to take a look at it. It's been a challenging week for the bulls for sure, but let's see what could be moving this week and what might be moving into next week as well as we dive into some stocks as well. So I look forward to going into that with you all today. Hello to you, Wacky. We've got Wacky Whack. We've got Jay Richardson here. We've got Michael, Oda. We've got Life in the Fast Lane. Great to have you guys all here. Cecil, welcome. Sharon, and others here. Kevin, Scott, on down the line. Good to have you all on board. Folks, any questions, comments you have, definitely throw those into the chat box so we can address those for you. And we'll dive in from there. I'm joined in the chat by a good friend and colleague of mine, Brent Moores, and you can follow Brent on X. He's listed his X address right there, formerly known as Twitter, of course. Brent Moores CS, that stands for Charles Schwab. I'm there, Mike Fairborn CS as well. Now, Scott is kind of rubbing this in our face a little bit. He's posted out there some palm trees. Of course, I don't have palm trees in Florida at all. And so, excuse me, in Utah. There are some in Florida. I was just looking over here in Florida, but in Utah. But there you go. Scott out there in Hawaii enjoying it. Hey, pretty good weather here, though. About 72, 70, 72. I'll take that. I'll take that year round. All right. Hey, on that note, let's hit some disclosures to get going here. Information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, the paper money software application, that too, is for education purposes only. Investing does involve risk, okay, including for some products more than your initial investment. Now, of course, we do have the futures disclosures here. We don't trade them, but hey, we put them here so we can look at the futures charts. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. Now, lastly here, some additional notes just to kind of take a look at and to understand. Past performance is no guarantee of future results. You can see there are additional pieces of information in here as well to be mindful of. And with that, let's turn it over into the charts and get rolling. Now, folks, I didn't want to look at this. Do we have to? Somebody's forcing me to look at these today. Could be because, yeah, hey, that's what we do in this class, Markets and Sectors. But, folks, that is, oh, let me kill that one. There we go. That was an old drawing, I suppose. But there you go. That's a look at the four major market indices, folks. And it is a little bit weak, to say the least. That's a 3-month view of each one of those. And I'm going to go ahead and just kill this over here. That was just like an old something going on. Take that off. But there you go. You can see some of the diagonal lines I've drawn in there. Some of the trend lines, really, previously. But you see where we're at? This is interesting. Now, I said this to you guys last week, and this generally, not every time, but this can happen. As stocks do move, the markets in general, sometimes they sell off on a Friday, right? And they bounce up on a Monday, and they can kind of consolidate if they're going to continue to go down or about a Wednesday or so, they begin to come back down. That's exactly what we had last week after we mentioned it. Just looking at the S&P right here, upper left-hand corner, you can see it. That was your Friday. You bounce back Monday. You kind of held flat. If we were going to continue with the trend, bam. And we were talking last week about that continuation of the trend. Let's just maximize this here real quick. But if we look at this, you can see this coming over here, and like we just said last week, so just something to be mindful of, big picture, just we want to park this in your minds, and in my mind too. I mean, as I'm looking at this, but look at this. I mean, every time we said you get the big follow-through red bars, that one counts. That was a gap. Gaps are dropping in price. There's no doubt about it. We got one here, and folks, we got another one here. Now, when that happens, we've been seeing that and seeing that acceleration. What I want to do right now is just go back to a kind of a standard. Oh, dang. Sorry. Hang on. Let's get off of that. There we go. So let's just go over here. I'm going to get into just kind of a standard S&P over here, SPX, and just show you one thing I did want to look at, which is a little bit, unfortunate in terms of the strength of this trend, because for a little bit here, we did have a trend line coming down. Oh, we broke it. We broke it. Okay, so we redraw the trend line. Okay, and we broke it again. So you can see the steepness of that line coming down. Do you see it? I mean, it's just like accelerating. So we really haven't even been able to draw a trend line yet that's going to stand in a position for us to kind of understand, is this trend kind of going like this? I mean, that's a downward trend. It's not a pretty trend what I just drew in blue here, but the point is what you can do with it is you could still draw off and say, yeah, I'm kind of getting a sense of where those bottoms might be hitting. This one still showing acceleration. Now, what I did post, and I put this out here thinking about you guys today for this class. If I come in here and I just sent this out, just easier for me to just post it here than to reset it up. But I just said, hey, viewing the SPX in inverse form minus SPX highlights potential inverted cup and handle pattern. Would you guys agree? Rounded bottom, you don't really see it the same way. I talked about this in the class yesterday, the ThinkScript class, but SPX, let's just go back now. I'm going to back out. Do you see the roundedness of it? Folks, if you really just break that down, and let's just do this, throw that minus sign in front so we can invert everything. This is an inverted. I'm going to take these off. Right, I'm just clear off all drawings because it just doesn't make a darn bit of sense if you flip everything upside down, does it? Bibs up top, what's going on? Now do you see the possible cup and handle? One of the stronger patterns out there is a cup and handle, and this is really weird because it's not too frequent, okay, that we see in what's referred to as an inverted cup and handle pattern. Inverted, and that's what we're seeing right here. It's inverted. It's easier to see because our eyes are glued into the bullish side. We're used to seeing bullish inverted cup and handle patterns. But if you look at this closely, just a quick note, okay, so first of all, how do many of these form? With that rounded bottom. Shoulder, head, shoulder. Inverted head and shoulders pattern is part of the cup and handle. And notice if you look real quick, or closely, I should say, right there, there's your little mini flag. And from that point, folks, it's been boom, rolling, just like you'd expect to maybe see from a flag pattern. Now, one of the quick notes, I just want to show you how to do it, but I did put the other drawings on here, so I'm just going to use this as a general guide here. Let's just pump it up here so you can kind of see it. But as you can see over here, I just said that is the projection for the standard projection. It's just the projected price target range, I guess. Let's put it right there for the cup and handle, very close to the 6,000 level. Just keep that in mind. It's a big round number. The projection came just slightly below it. If you see here on the chart, it's just a little bit below, but the 6K number is big. Do you remember the 1,000 range last time? That was the 7K down here. And where was the 7K? The 7K was the bottom of our rounded bottom here. So not unusual for the market to hit around these levels, but that's a dip of about 1,000 just on the regular target. And to get that target, just, real quick, you're taking the low end of the cup to the top of the cup, and then you're measuring that from the breakout, and boom, there you go. Now, does it match anything over here? Actually, I have to pull up the chart just to kind of show you this real quick. It is a little bit. If we go all the way up here, our target is kind of interesting. It's right around this sideways range right there, and more particularly right at that gap. Now, this can be very, very helpful to know where that target could be, but some people do like that cup and handle because it can be quite bullish if that's what we're seeing here. Now, it's kind of, I mean, it's definitely setting up for it. Of course, it is an inverted cup and handle. We just drew it this way using Thinkorswim tools to help us with this, to see it by putting the minus sign in there, but there you go. You don't see it too often, but if you see these rounds over here, yeah, just park that in the back of your mind. It could be a cup and handle, okay? Now, not all the stocks are going down with the market. In fact, a matter of fact, some are going up. Some are going up. And we can look and see what's been performing on the week. We could see, I looked in yesterday's class. I'll just throw this out here if you guys want to get a visual of that too. Real quick. That's just that X post. But I was going to say, that talked about this in the class yesterday in terms of just seeing what is correlated and not correlated to the markets. I'm just going to pull this up over here real quick. I built this correlation study. It's a ThinkScript study. I'm going to do this real quick here first. Let's go to the indices so we can just see what the correlation looks like. And this correlation, just so you know, is pulling up over 40 days back. It's a 40 bar. So basically, you're looking at about a 2-month time frame. Now, I've got over here measured as 1 week because this week's been pretty brutal. And that trend, like we just saw, is accelerating to the downside, right? It's going down. It's going pretty sharp to the downside. Now, just a second here. Yeah, there we go. Hang on. This might be a little bit, just checking my numbers and making sure. That's 5 days. Okay, so you're getting performance over the past week. I'm going to go ahead and just put this in as a month. That might be actually a little bit of a better comparison just in this study. All I'm going to do is simply go over here and just change this into a 20 time frame. Because we've been really, that trend acceleration has been happening over that time frame. I'm just adjusting these. Click. By the way, ThinkScripts, I'm talking about them. ThinkScripts aren't guaranteed for timeliness or accuracy. Just a quick overview of that so you got it. Yeah, it is. It helps, James. Those inverted views are really, really helpful because I don't know. I think our eyes, honestly, we looked at so many bullish scenarios. We don't just learn to short the market. We learn to normally, go on the other side, more like the long side. So that minus sign can be helpful when markets turn down, right? To see things like that. Coming over here, let's get this loaded up here. I've got a correlation study correlated right now to the S&P 500. I talk about this in that class yesterday quite a bit. If you guys want that study, I'll just give you the link to it. This is the NDX. So I've got the NDX right now. That's right, I flipped it. SPX is what I normally will do because we are looking at S&P 500 sectors. You can change this weekly, daily, and I actually wanted to change this to this aggregation. I talk about that in the class. These are the variables that you put in right here to use that correlation indicator. Got to let it load up now. While it's doing that, real quick, if you guys do want it, because it was really kind of designed for markets and sectors. And so, yeah, let's throw that out there for you. Again, not guaranteed for timeliness or accuracy or ThinkScripts, but hey, as long as the data is good, then it should shoot it out correctly here for us. Generally, we have good data, right? So Thinkorswim. But this is the correlation class where I have that script in there for you too that you can utilize. But there it is if you want it. All right, now let's go over here and point this out right now. Over the past week, wow. So energy has been doing well. Clearly, energy's been doing good right there. 12% this week. Wow. And that's, so you're looking at, you think about it. So there are ETFs, of course, that you could look at for the energy sector as a whole. We've got a basket of companies within here. Everything in green, just so you know how this script works. And I can share this script with you. I think many of you have it. And by the way, what I'll do with this particular one, I'll just put it in the description section for those of you that are viewing on recording as well, so you have it. I'll just give me 1 second. I'll get this shared for you. But as a quick note, if it's in green, all it means is that it outperformed the S&P 500. It's still negative. It's still close. Still lost on the week. 3.96. Is this even lining up? That's funny how that did that. It should be -6 up top. I might need to fix that code, but you get the general idea. These outperform the market. Of course, this one just went up. These ones outperformed the market. These ones really got hit. Let's look at it. Healthcare, comm services, a form of like technology too. Clearly, what you're going to find in there is like Alphabet, huge mover in there. Alphabet. Some of the social media portions of the Mag 7. Guess you could call it the lag 7 actually, because it has been lagging in the market quite a bit too. So over here though, underperformers, performers, quick note, you can see up top here, if the correlation's above 0.75, Boom, you got it right there. 0.89. Yeah, it's going inversely. It's inversely correlated to the market almost 90% of the time. Almost 90% of the time. Now, utilities. This is interesting. I have it in blue here. That means it was between 0.25 and a minus 0.25, meaning that it marches to the tune of its own drum, and utilities often does just that. So if you're looking for maybe, okay, according to what we're seeing over the past, again, 40 bars, and this is over 40 days, that is, not calendar days, but market date. Shoot, I better put that in. Market days. I should have just put bars. Market days. Bars is a lot shorter word to write out. Same thing, though. It's bars. You get the idea, right? But it's about 2 months. And utilities is kind of doing its own thing. So it may not be as impacted by the market as much, right? So here you go. I just want to throw it out so you guys have it here. Now, if we want to take a look big picture, shoot, we can do that too. Throw in anything. Once you got the study, going over here, actually, let me share this one first. I mentioned I would. Yeah, let's just go right here. I think many of you already have this, but boom, we'll put it in. Oh, and by the way, I can share the other one here too for you as well. So that's the first one. And this one, while you're here in class, I'm going to do it, but you can also go into the class. Anybody on the recording can take a look at it as well, but here you go. Here's that correlation study for you. Right now, share that, and there's just a lot more explanation in the class if you want it. Here you go. Here's the other one. Okay, everybody. Hey, just wanted to pause real quick. Welcome, everybody, joining us live from the Denver workshop. Everybody, welcoming them in. Great to have you guys on board. That's Ben Watson. Does a great job, of course, within those classes. I think we've got Kevin and Rachel out there as well. Correct me if I'm wrong, though, Ben, on that. But we're just looking at correlations to the market right now, everybody, and just seeing, what we might be able to look at in the market, and talking really about this sort of, just as a quick overview of what we've been discussing. If you flip the market upside down, you're getting a large kind of a cup and handle type pattern with projections maybe somewhere around 6,000. We're just seeing a lot of strength around that right now. We're just looking at the markets in sort of an inverse format, and that's what we've been talking about today. But yeah, great to have you guys on board with us, of course. And there we go. Some hellos out to Ben. Fantastic. All right. So let's just jump back in then and talk a little bit about some of the correlations with the market and see what's really moving inversely to the market and where we're really seeing a lot of strength, just using this correlation indicator, which I talked about yesterday in that that ThinkScript class where we go through the code itself and share that code. If you go up top here, though, you can just go down into the public folder and go to the S&P 500, and there you go. It's going to load up here for us. Those correlations, I'm going to take the weekly one out for now, just to get this to load up a little bit quicker. Those in red are going to be inversely correlated to the market. And if we take a look at some of these, you'll start to see that, yeah, when the market's going down, these companies instead would be firing to the upside. These are kind of neutral in blue. They kind of march to the tune of their own drum. You're going to see some healthcare in there. We just looked at the utility sector falling into that category. And down below, these are all of the ones, and there's some still, many are still loading. 90% correlated to the market moves. So if the market's going down, if that inverted cup and handle pattern is starting to unfold towards 6,000, these could also continue to show weakness as they've run with the market. So just some ideas there. That's over a 40-bar time frame, using different time frames we talked about in that ThinkScript class yesterday on how to do that. But I put the link in the chat if you guys want to check that out. Okay, so up top here, but these have been moving inversely. Look at this. So you're getting some of these too. These are technology companies. Just as a quick note, Dell's in here. I'm not going to go inverse Dell. Let's just go Dell in this case. There you go. So this is one of our swing trades we did earlier last week. It did hit the target, but the thing here is it's showing that strength. I'm going to take out our lines right now to measure that flag, because a strong move like this, a lot of traders will just look for a 2 to 3 day pullback or a very slight consolidation. Here it is again, coming down, getting close to resting on prior highs. Some traders will watch this, We're not getting a hold pattern right now, closing above the high of the low day, but we could maybe into next week. So this is one to maybe keep an eye on because, yes, there is the possibility of support right here. Was resistance previously, could be support as well. All right. We had AKAM. Of course, we know we got a lot of oil stocks that have been running up. Now, this is another one that's pulling back short term. But here you go. That's kind of a pullback over a range, getting closer to another key higher high. Don't know if this is going to be a flag pattern or not, but it very well could be a flag pattern right there. Okay, sort of a bounce. We don't know if we'll get a bounce or not. That's the question that we're looking at on some of these right now. But notice they are inverse to the market. Some other ones here now. Yeah, oh shoot, I got to let it load up again. I should have detached it. Anyways, a lot of oil companies. In fact, I just remember them. I'll just hit a few of these right now, just so you're aware of it. Yeah, total. These are upwards high 80%, 90% inversely correlated to the market right now. Really solid money flow in a lot of these too, as you're breaking out higher highs and higher lows. So there could be a lot of different potential trade strategies around here. Some traders will even go short term and just try to trade some of the little flag patterns here as well when it's this strong. I mean, that's one way to potentially do it. Right now, it's so strong, it's hard. I mean, look at this. Maybe there's a possibility of a flag pattern developing here really short term. You can see it just going sideways there, but a lot of traders might just wait for the next day to see if you start to break out of it, if there's going to be a run. Now, the one thing I will say, though, with oil that might be different from utilities is if we were to get a sharp reversal in something like this. Here it is at 100. Have we had resistance at crude light at 100? You betcha. We sure have right there. I'm just drawing a line. And we could bounce off it again. Okay? But if we start to break up into this area, if the conflict starts to expand in Iran a little bit and they start firing off weapons into their neighbors' territory to disrupt energy production into those facilities, a lot of people, I mean, analysts, I should say, are saying, don't be surprised if you see like a 150 range. And that could have a big impact on some of the oil stocks, right? They could also move up because as we're getting the oil out of the ground, they could be going to, but I just want to let you know, we could see a dip like this as well. I mean, hey, what if something gets resolved? I don't know. It looks like it's kind of a quagmire right now a little bit. The whole idea was 2 weeks ago that everything would, we can kind of work through it. I think it's getting better. I think the U.S. is in a better position, but I think the groups in Iran might have dug their heels in pretty deep on some areas. They're talking about putting a toll out for the Straits of Hormuz. I don't know if that's going to fly, you know what I mean, so to speak. All right. Well, that's that. So that's oil. Those are some of those companies that have gone inversely correlated. And by the way, with that too, we just have to bring it up because you're going to find a lot of companies over here that have been down with gold. Now, why has gold been down? There's NEM, looks a lot like B. AEM, Agnico Eagle Mines, another big player in gold. They have like, I think all their mines in the U.S., by the way, U.S. or Canada. Not the same with something like a Barrick, and then you get some crazy things happening when you got mines all around the world, and the price of gold is as high as it is. So a lot of people like to get a hold of that gold, if you know what I mean. But anyways, at high prices. But a quick note, let's just take a look at GC. Now, I'm going to explain this right now to give maybe some insight. And this is just a general theme that you might see over long periods of time. If you go back historically, you might see something like this. And I'm talking about dot-coms, the dot-com area. I'm talking just pre the mortgage crisis that we had in 2007 and 8. Some quick notes too, because we got to hit some other areas, and we want to take a look and see what may be looking to move. And I gave you some ideas on how to look for that into next week by looking at the correlation study, which I did share in the chat, and shared also the location of that too, if you want to check it out, the correlation class. That's in the chat. Okay. So with that, let's do this. Back to our charts. So bam, to the downside right now, possibly forming that inverted cup and handle. Now let's go over here and I'm gonna just look at some correlations, just big picture first, before I go into the correlation chart. It does show up, yeah, for the past 6 months now, relative to the S&P 500 rolling over. There are some standouts in here. Let's just put some some checks in there where we have been seeing some general strength, still healthcare across the board. Now, this is healthcare stocks that are going to fall into the S&P 500 a little bit sideways in here, but industrials. So generally speaking, and oh, by the way, we said utilities, marches through of its own drum. So too does RE or real estate right there. Everything else, I mean, they've really highly correlated the markets. And you'd think that. Financials, what am I doing? We got to go red here. Financials, discretionary. Technology, there's your communication services really getting pounded over there. But there are some areas that have really been showing strength. And by the way, energy, utilities making highs now. Okay. Or very, and many of those, if the whole sector is going up, a lot of times it can be fundamentally related as well. We know there's fundamentals over here tied to this. Materials, though, too, high, as well as industrials and some others. So there you go. Staples, too. So let's go in and take a look at one more chart before we look at some of the stocks specifically. And there we go. The sector grid, the 6-month sector grid. Now you're just saying those charts themselves. I need to line this up better, right? Because my staples is over here. This is what I like about this. This is better because now we see the actual charts. Because when we go in and look at the stocks here, they're going to be setting up like this, not the relative strength. The relative strength is a look behind the scenes a little bit, not this. This is a little bit different. This is looking at the charts themselves, the performance of the charts. So you come over here, yeah, discretionary, down, financials down, tech down, communication services down. Real estate, relatively speaking, it was going up, but what about the charts? I'm not going to trade relative strength. I'm going to look for insights there, but generally RE is coming back down. Utilities is basically maybe flattening out in terms of a spread trade. Healthcare down. Industrials down a little bit too. Could it flag back up? Sure. But now that we've done this, it's a whole different category to really look at. Check for strength, check. Some of this over here, but I'm going to narrow it down. Staples and utilities knocked out 3 additional ones just on the chart. Now we can really see where maybe some of the flag patterns, the moves might be occurring here. By the way, do we want to throw technology out completely? Well, there can be some that outperform in technology too. In fact, one of those right now, we go into it. Let's just go right back into it right now. It's been holding up a little bit, bouncing and holding off that 200-day moving average is Apple, although it looks like it just started to fall apart in the last little bit of we've been talking here. There's a 30-minute chart, but been holding it. You're getting a 200-day about right in there. Maybe you guys have seen this. Just a side note, though, throw that out super quick. There you go. Sometimes it'll bounce when you get off the 200-day, and we're getting close to it. You bounced one time here. You may, in fact, bounce again. We don't know if we will bounce again, but we might. And that also acts as a little bit of support through here. We don't know. It's under pressure, though, as of late in the day here. Now, you have to say this. This is one quick note. If the market begins to show some strength and consolidate, instead maybe start to go sideways a little bit, just a little, the first ones out of the gate into the ones that have sold off are going to be those companies that instead of making new lows, because this trend's not accelerating lower with the market. In fact, it's going flat right now. Those are oftentimes, not every time, but they can be the first ones out of the gate to run the biggest. Why? Because they're holding up in a really kind of a meltdown, sort of a meltdown market. I mean, the trend keeps accelerating. That's kind of a meltdown. But sometimes those can be the first out of the gate. So interesting ones, just park that in your mind. Which ones are holding up as prices are going like that, falling off a cliff? Not exactly, but they're still accelerating. Look at those and maybe even consider keeping a watch list of these companies. Apple, what was the other one we just looked at? Well, Dell, another technology. I didn't want to throw those out completely because some of those are going. AKAM was another one too. This is totally the opposite of the market. It's an inverse to the market as well. Now, we did say consumer staples. There's Kroger. So Kroger is closing above the high to low day as it stands right now. I can't really technically say that completely because the day's not done. But as you can see, we have had this tendency to have these flags unfold here, higher highs, higher lows, when we got the hold pattern. And that's what makes them interesting when they're really a part of maybe a longer term flag. Again, this is the high of the low day right here, right there. That's the low bar, right? Low bar. We didn't make a new high across this whole point until today. We still have to close, but it looks like we might close there above that level. So it's an interesting area. And so we're starting to see some sector rotation right there. Do we want to put a trade on in this class? Well, I'm going to give it up to you guys. We're going to look at a couple and you guys decide for me and we'll put one on. I just want to put a poll out there and see what you think between the two in terms of trading. Now, here is Walmart, and Walmart a little bit down, but holding up pretty well given everything. Now, again, I don't want to throw everything away because obviously energy is really running up really strong. And, you know, if that's the kind of a scenario setup you're looking for, but remember, it could reverse if oil goes down just as sharply. Do you think there might be some leveraging going on in some of the oil stocks right now? It tends to be that way when you get the strong charts. So we're just saying, hey, if we kind of ignore that, at least for now, until maybe they pull back a little bit and look at some of those that are pulling back and maybe giving some indication. So I didn't want to bypass energy completely, but I wanted to show you staples, some of the staples in here. Bounce. Okay. Now, we've always made a new high, a low here, but if we don't make a new low, in other words, we come over here with Walmart, we did break above this resistance level and we're kind of holding it now. But if we start to kind of make a higher low and break again, folks, then this thing that we've seen over here suddenly changes. That's what you'd call a change in trend. It's a higher high and a higher low. And we might get back to one of these, right? Where you're kind of starting to go back up. So this one, and okay, so one more, TGT. TGT, falling into this area. They did get a new CEO right in, I want to say over here somewhere. Don't quote me on that. I think it was over here, but still seeing some strength in Target. A bit of a bounce coming higher here. Now, you already did technically get a close above the high to low day on this bar here. So this is just maybe seen as more of a follow through here, the possibility of a bounce. Okay, so let's just do this then. I'm going to choose those ones that are already showing us signs of a hold. Let me just see what you guys think here. Okay, so let's just put one in though for next week's trades based on just general strength of trend here. Okay, let's see if we can get at least 30 votes in here. Okay, that generally gives us an idea of the whole basket of people. If we can get about 30 is a sample size. You're seeking about 30. Okay, so flag type trade. Okay, first one, Kroger, second one, TGT. Both in an area, again, we kind of confirmed, but we'll just give that a couple of minutes here just to see what we get on there. Okay, let's look at some other areas as well. So you know what else is interesting too? This Delta Airlines actually bounced back up and cleared this range. One of the issues is energy prices, though. This is going to be a fascinating one to see what happens. This is something that could actually gain some strength if, in fact, you did see oil bounce off that 100 and then go back down or consolidate or positive news. One of the huge input costs to airlines is obviously energy prices. The other one is labor. Labor and energy costs are the big ones, like, you know, unions and stuff like that. But you can see that over here. So we did get above that level, and there is a long upward trend. The question, folks, is do we hold this now that we got back up above it? Just kind of interesting. It's just sitting out there right now. Let's do another one right now. Let's see, GEV, also strong, extended over a period of time. You can see the pullback, just dipping a little bit, but below these highs over here. But you can see right here, a bit of consolidation. So I will say this, as you've been going higher, so too, according to the money flow, buyers have been jumping in as well, perhaps. Okay. Yes, they may have been doing just that. Now, Kelly says RS scan, relative strength scan, is going to help us find these and find these quick. We will show that as well as we go through this. Here's WDC. Different from like a Micron too. Micron dipped a little bit low towards, looking at memory here, but WDC quite strong. Again, they have a long backlog, a huge backlog in terms of requirements for AI and just building more memories, it spans out, etc. But it's just they've had some big runs over here. Again, some of the energy type stocks. Now, getting into what Kelly was just talking about here in terms of a scan, there is a relative strength scan that I did build in the ThinkScript class. I'm just going to pull that up right now. And it is this 20-day relative high. It's just going to say what stocks, relatively speaking, are making, not only been moving up over the past 20 days, but making highs relative to the S&P 500. Let's just pull it up right now. I'll show it to you guys right now because we are scanning in the S&P 500 as we speak here. But these are some of the companies. You're going to see about 94 of them, I actually out of the 500 that have been showing some real strength. And what I wanted to do in here is highlight a couple of these gas stocks too. Occidental, OXY. Wow. Still just showing incredible strength. Again, though, when you do this, you can also expect downward moves. They can be sharp too, particularly the underlying behind this is, in fact, energy stocks themselves, right? And energy, if energy goes down. Since Kelly brought that up, though, I'm just going to highlight this. Here is that playlist right here for it. It was this class right there, actually. Yeah, where we did build that out. I'll just highlight it if you guys want to see it in the class. And there you go. Okay, so how are we doing on our poll? We're still at 50%. 50-50. All right, I got to click it at 51 because we're going to be there for a while. I've been watching that go back and forth. That's about as close as that poll can get. It was 50 for a while. Appreciate you guys voting. There's 39 votes in there. Excellent. Now, it doesn't mean that you can't go through and just place a paper trade on either one of these, but KR has the votes. So let's go ahead and just put a trade on KR right now in anticipation of a move to the upside. And one thing I'll say about KR as well is we did take out this prior high on this run. So we can look at this right here. Now, if we're looking at this, it's really kind of in line, or to be in line with a bit of this right here, like a mini flag pattern, basically, like this. You guys see the potential for a flag pattern right there? So about 80. So it's just looking for a follow through. That's what you refer to as a T2 target trade. A T1 would be just up to these highs here. So let's just go ahead and put this on with a stop order down here. Remember, as we put in stop orders don't guarantee an exit at that price, at or near that price. And instead, they go compete with other existing market orders. But we'll put it below this level. We'll set our target upwards of about 80 here. So let's click on the trade tab. I'm going to right click on the ask price and do a custom order. Good tail cancel, good tail cancel. We'll just make it a 100 share trade right there and we should be good. So let's put this upwards of 80 for a potential target range and down here about 70. We can adjust it on the chart though, but always read that dialog box as you go through. Take a look at your buying power effects. In certain areas just to confirm you got the trade in. I'll send it through right now though. There's our KR practice trade in terms of this bounce fulfilling a potential setup. We got the 80. We got close on our potential exit range. I'll put that in right now, right about there. Okay, so there we go. Just looking for maybe a follow-through run in an area that, I mean, KR up, market down, see what we get. This could be particularly interesting, again, if that inverted cup and handle begins to go to the upside. All right. Well, you guys, that is what I have here for you today. It's been good being with you. Great job in, making it through the week. Keep an eye on those big picture moves of the market. Quick note, though, I'll just highlight this real quick here while I've got it at my fingertips. We had so much to look at today, but there is a market sector review. Just a couple of quick notes here. You can see that we are obviously going down here, generally holding up breadth-wise on the NYSE. Again, if we can get back up above, well, it's tough when you're dropping, and there's a look at breadth right now, not doing great on the markets. We did get another omen, Hindenburg omen coming in, but we've not yet to see a lower high. So we'll see if that trend does flip. Okay, lower low, lower highs on a weekly. This is a weekly chart. We'll see if we get that. A couple more highlights. Yeah, seasonality. No, kind of blown out right there. There's your 30-minute chart. And lastly, right here, we did say that there could be an acceleration range if, in fact, we get through that level. And guess what? We did. We kind of accelerated to it. Now, the next, and so it just have diminishing volume. So there could be a dip. Remember, that's where your target is for that inverted range near 6,000 or so. That's a support level here. All right, everybody. Hey, have a terrific weekend. Look forward to future discussions with everybody. And with that, wish you all well. Brent, thank you so much for helping out in the chat as always, folks. Keep an eye on the short term. Make sure that, when you see volatility and things spike the way they've been doing, just be very mindful about your position sizing, etc. Keeping an eye on just general positions. All right, with that, take care, everybody. See you next time.